I like to say in international trade we have three main kinds of risk: commercial risk, country risk, and currency risk. You'll see the slide calls the last one foreign exchange risk, but it's sometimes easier to remember if you think of the three C's: currency risk, country risk, and commercial risk, country risk, and currency risk. Commercial risk you'll also hear referred to as customer risk, because it's really about not getting paid. Now, there are other issues around the commercial transaction that are risks in international trade. Getting paid is one of them. Not getting the goods there on time, or not getting the right goods there in the right condition or the right quality, or just outright fraud. There's a number of issues in the commercial transaction that are there, but we'll focus initially on getting paid, but then we'll address some of those other issues as well. Country risks are really about working in countries that may or may not be as stable as you might have believed, or that maybe they aren't stable and you've chosen to do business there anyway because there's business to be done. So that country risk is a factor that has to be considered as well. And foreign exchange or currency risk is another one that has really challenged exporters for years. Just the whole notion of being paid in another currency can be challenging. And if you don't get paid in another currency, if you demand or insist that you get paid in your own currency, then your customer faces currency risk, and that's not very customer friendly. And you can lose business even if you're not prepared to accommodate your customers on currency risk. So you have to at least be able to assess those risks in a reasonable fashion and take steps to mitigate them in ways that give your business confidence and still allow you to do business. There are quite a number of sources of information for